Commercial real estate is one of the most entrepreneurial industries out there, but even for people who don't strike out on their own, the earning potential in this industry is huge. There are a lot of ways to make money in real estate, and even though you can do very well raising capital to do your own deals, starting your own company as quickly as you can usually isn't the most direct path to making this happen. So in this video, I want to highlight the main reasons why, even if you do have entrepreneurial aspirations, getting a job in commercial real estate can be one of the best things you can do to maximize your earning potential in this industry in both the short and the long term. So the first reason I recommend getting a job in commercial real estate first is that you'll gain access that you wouldn't otherwise have without a company behind you. With most commercial properties priced well into the seven figures, it's pretty rare that a 22-year-old right out of college is going to have the capital required to buy a property outright. And raising equity from investors to fill in the gaps without any experience is very difficult to do. And while you could invest in a publicly traded REIT to get some exposure to commercial real estate, this removes a lot of the tax benefits that come along with investing directly. And if you want to invest passively in commercial real estate, you probably don't meet the income or liquid net worth requirements to make that happen, meaning that your investment options are going to be pretty limited at this point in your career. But when you're working for an established company, even at the analyst level, there tend to be a lot more options that open up to you that can help you get the ball rolling. For example, if you're working at a real estate investment or development firm, there are sometimes opportunities to invest directly in the deals the company does in a way that isn't broadly offered to the rest of the general public. Typically, if you want to invest in commercial real estate as a passive limited partner, you need to be what the SEC refers to as an accredited investor, meaning that you've either made $200,000 per year as an individual for the last 2 years, or you have a net worth of over $1 million, excluding your primary residence. And even if you do fall into one of these two categories at 22 or 23 years old, investment minimums are typically $50,000 or more for each individual deal you'd invest in, which can make it extremely difficult to get exposure to commercial real estate early on in your career. But when you're working for a company that raises capital on a deal-by-deal basis, there may be an opportunity to invest in the company's deals directly, even if you aren't considered an accredited investor at that time. And if that's the case, your firm may also allow employees to participate at lower investment minimums with a $5,000 or $10,000 threshold that can make investing in real estate a lot more feasible when you're just getting started. And if you end up landing a job in commercial real estate brokerage, some of your clients may also allow you to roll your commissions into the deals you work on, which can give you exposure to a wide variety of different investment opportunities across a wide variety of different sponsors. Working in the industry can ultimately get you into deals that you would have never had access to if you were trying to do these things on your own, and this can also help you diversify your investments early on in your career in a way that's very difficult to do if you're doing deals outright. Now, the second reason why I recommend getting a job before striking out on your own is that you may be able to make the income that you're trying to make by working for an established company. Jobs at real estate investment and development firms will typically pay their employees with a base salary and a bonus, but as you progress within these companies, opportunities to participate in fees and promoted interests start to come into play. And from a fee perspective, this generally shows up as a percentage of things like acquisition fees, asset management fees, or disposition fees, depending on which part of the business you're actively working in. But regardless of where this comes from, this income can end up being substantial and can significantly change your all-in pay. For example, if you're working as a director of acquisitions and you're earning 5% of the total acquisition fees your company generates, if you close on just 5 deals per year, averaging $20 million in value each, and your company charges a 1.5% acquisition fee, this would result in an extra $75,000 in income on top of your normal pay. And when you tack on promoted interest, these numbers can start to get a lot bigger. And if you're also entitled to 5% of the promote the company earns, and those same deals generate $10 million in promoted interest at the time they're ultimately sold, this would add an additional $500,000 of income to your total compensation. And when you stack these numbers on to base salaries and bonuses that can often be in the $300,000 to $400,000 range for more senior level positions, commercial real estate professionals can generate huge all-in pay packages while also having a base salary to fall back on during times when things slow down. All of this is to say that a lot of people find that while they don't have unlimited upside by going this route, these types of income levels are more than enough to fund their lifestyle. And if you consider yourself relatively risk averse, but still want to earn as much money as possible, these types of opportunities can be a great middle ground. Now, the last reason why I recommend getting a job before striking out on your own is that working for an established company at the beginning of your career allows you to effectively get paid to learn this industry. By working for another company, you're able to get an inside look into the thought process of people who have been investing in, managing, and selling commercial real estate for 10, 20, 30 years or more, and this can give you a really valuable perspective that you otherwise would need to learn the hard way. Industry veterans can see red flags related to certain physical aspects of a building. They can see the potential upside in a given location based on projected job growth or population changes, and they can also identify untapped areas of the real estate market in general that most people don't even know exist. Especially if you plan to do your own deals in the future, working for an established firm can give you a blueprint for how to do things correctly, and this will also give you a team of experts to lean on for advice and guidance as you progress throughout your career. And if you plan on investing passively as a limited partner in the future, this will also give you experience on the other side of the table to help you understand what reasonable fee and promote structures look like, how much risk you'd be taking on by investing in a given deal, or whether a sponsor is ultimately qualified to manage your money. In my opinion, if you want to be a real estate entrepreneur, one of the best things you can do to make sure you're successful in that process is start your career by working for an established company first. And if you are looking to land a job in commercial real estate right now and want to make sure you have all the skills you'll need to be a competitive candidate for analyst and associate roles at some of the top firms in the industry, make sure to check out our all-in-one membership training platform, Breaking a CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Breaking a CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on commercial real estate pay, make sure to hit the like button and let me know. And let me know in the comments what other pay related topics you'd like to see covered in a future video on the channel. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.